Hey, what's going on? Welcome back to Trading Options Network. It is July 10th, just after 10 a.m. Before we go ahead and get into anything, of course, we got to go ahead and get our disclaimer out of the way. As always, everything is for educational purposes only and is not the opinion of Trading Options Network. That being said, be sure to like, follow, or subscribe at your favorite social media platform to stay up to date with Trading Options Network. That being said, just like the last couple of days, we gapped up just ever so slightly, and we've done nothing. Again, I've been saying it all week. I'm pretty sure the market is just waiting for the CPI and PPI data to come out. No one's really wanted to do anything. Not to mention we are coming off of a holiday weekend, so maybe some people are still on vacation. But again, I really believe we're waiting for the CPI and PPI data. Excuse me, to come out before the market decides its next move. So, haven't seen anything. One thing I did want to point out really quick, of course, if you are a Platinum member, you would have gotten the notification. We did go ahead and close out our Roblox trade because there was news this morning about a lawsuit, go figure. And as of right now, even though it's come back a little bit, it's down to 38.80. It was just diving fast, so we wanted to get out of it while we still could, just in case it decides the last couple of days before the trade expires that it wants to have a little pullback here. I mean, this is definitely a pullback territory, so God forbid it pulls back and we lose all of our profits. We don't want that to happen. We're happy with where we ended at. Yeah, we may have given back a couple grand today, but we still finished the trade up almost $6,000, so that's obviously a very big win in our book. So we're happy with that. Coherent Corporation is still trying to figure it out, what it wants to do. Again, I still like it. We have 37 days till expiration, so no need to panic on this one. It's still looking just fine. We have a nice inside bar here so far for the day. Again, yesterday it gapped, or I'm not sorry, it didn't gap down, but it definitely was falling, and then it bounced nicely off of that support. So, we still like where we're at there. McDonald's is doing somewhat, I'm not going to say it's doing decent today. It's up, about 0.5%, but again, that's totally fine. I mean, it's done nothing since its lows of yesterday. It's done nothing today. It looks just like it's wanting to just kind of sit there a little bit. And my guess is it will continue to move down even lower in the next couple of days. So again, we're looking good there. The semiconductor ETF is rocking it right now. So it's given us a nice little, I guess you could say, a nice lead over our short leg of 260. So it would literally have to fall about 1% from where it's at to be considered not a max gain. So I like that. And then finally, T-Mobile. T-Mobile's kicking butt for us today. I like it actually quite a bit. This is what we wanted to see from T-Mobile. Nice little green bar to get us back into that profit spot. We are literally 5.5 cents from going over our short leg. So again, we're 5.5 cents away from max gain there. I mean, we were technically over a little bit ago, so it's looking phenomenal. Overall, all of our trades are looking great. Can't complain with anything there. The market's a little 50-50 right now. So again, this is not the type of market I want to make trades in when we're just doing nothing. I know a lot of the bigger companies, it looks like there's more green there than there is red, but if you were to actually scale it back and look at it more from a equal weight point of view, I can't tell. It looks to me like it's pretty 50-50 between companies that are green and companies that are red. Software is looking like it's having a hard day today. Financial is, the credit services anyways, is looking a little bit weaker today. Consumer defensive is looking a little bit weaker today. Consumer cyclical because of Amazon mainly. A lot of it's actually quite green, but we still have some red in there. We got Nike's red, Deckers Outdoors red. What is this one? Bookings.com, Airbnb, Royal Caribbean. And this is funny because Royal Caribbean, we actually put in our bull watch list yesterday. But overall, if we go ahead and pull up that chart really quick, Royal Caribbean, maximize sell. Again, this is one of those where yesterday I mentioned we didn't want to go ahead and chase it until it really had a convincing or a confirmation candle, and we did not get that today. But what we could potentially see here is a nice little another pullback down to the 20-day moving average, which has been acting as support quite a bit. It did dip down here a little bit, gave it a nice bear trap. But it continued to move up. So again, if we can see it come down and retest the 20-day yet again, and then get confirmation on a bounce there, then maybe we open up a position. Adobe is another one. We mentioned yesterday we're not going to go ahead and chase this, but if it does come back down here and we get a nice little bounce off the 20-day, then we might open up a position. But right now, Adobe is looking. It's been weak for a while, so it would have to be quite convincing. Even if it did bounce off of the 20, this is probably not getting more of a 1 or 1.5% confidence because of how bearish it has been, in recent memory. If we go back more like 1 year, it's kind of iffy. I don't really know what else to say. Definitely has been bearish here, and then it got bullish, and then it's been bearish, and now it's bullish. This is the last 3 years. So, again, it's not one that I'd be super confident on. It's not one like Apple or Amazon that just seems to want to just go up and up and up and up and never slow down. So, that being said, we see a nice pullback, and then that bounce. Again, it's getting 1, maybe 1.5% on the confidence score, so it wouldn't be a huge position nonetheless. But, we'll see what happens. Airbnb, again, pretty red. Apple, of course, it's green. Why wouldn't it be green? It's all it wants to do lately is be green. But again, we're not going to chase. We are not chasers. We are not FOMO traders. Okay, if it just continues to move up and we miss out, then so be it. We can't be perfect on every single stock in the market. It's impossible. Then finally, Colgate. This one's looking okay. I'm not convinced. This is not really a confirmation candle or anything like that, hey, we're going to go up. Since we bounced off that 20 yesterday, it seems like I wanted to test that 20 again. But we haven't even gone really higher. Well, let's see. I may have lied. Let's see, 97.64, 97.62. So yeah, technically we haven't even hit yesterday's highs by, it's only been 2 cents, but we want to see it going over yesterday's highs before we really, and convincingly in a way, not a couple of pennies over. But we want to see it go over yesterday's highs before it really kind of tells us, hey, yes, this is looking good. Let's go ahead and open up a position. I still believe if it does give us any kind of confirmation at all, and maybe we finish around this 98 level, we can definitely test 99, if not 100, in the next couple of weeks. So still a good position, potential position. If we go ahead and look at our couple bears that we have on our watch list, and again, we could probably add a ton more. But nonetheless, ALB, okay. So again, we didn't open that position yesterday because again, this is, while it did break down below support here, this was almost something that I wanted to put in the position, but that was quite a drop. We're talking, what was it, like 7% or something like that, or 8% of a drop. While oftentimes it can continue to move down. It could be a lot of people that see this as an opportunity to get in at the quote-unquote at the bottom. So that seems to be what is happening today. People decided to start buying it, but I would not be surprised if we go up a couple days and then just completely roll over. So this one will probably be a bear position in the near future if we do see that, because this is a pretty nasty candle, and yeah, we're seeing a little bit of a bounce today. That's expected off of major moves like that. So we'll see what happens with that one. MP, again, it's not convincing either way. I suggested this might have been a bull trap, and now it's wanting to consolidate a little bit. So the longer it stays up here, the less I think it's a trap. But again, it hasn't really convinced us in either direction. So we'll just, not pay too much attention to that one, just see where it goes. And then tech resources. Again, this one, it came down and threatened to drop below the 20 here, but now it's bouncing nicely off of the 20, and now it's smack dab in the middle of the 20 and the 50. So, this one is actually an interesting trade because this is setting up to where it can move in either direction and potentially in a decent way. I mean, if we look at how narrow the Bollinger Bands are getting, the last time it was that skinny was back here. Looks like that was in early March, and then sure enough, it had a nice big breakout to the upside. And since then, I'm not going to say it's been moving sideways, but this was a high of 46.14, and we're only trading at 49.46, and we're 4 months later. So, that's not a huge difference from 4 months ago. Yeah, it had a higher high of 55. But in the grand scheme of things, when you're looking at just a straight line across, we're not far off from where that was. So that is why the Bollinger Bands themselves have been narrowing, because the price action itself, if you look at it at a grander scale, has not moved much. Okay, and if we were to go back a little bit, I forget, can't do that necessarily in here. But if I go to the 6 month, for example, or the 1 year, as you can see, it was doing the same thing here. Yeah, I was moving up and down, but in the grand scheme of things, from here to there, back here, the price point itself didn't really change much. So hence, that's why the Bollinger Bands had narrowed. And again, same thing here, actually. The Bollinger Bands were narrow, nice little pop. Okay. Bollinger Bands were narrow, and a nice drop down. So that seems to be what's happening over here. Those Bollinger Bands are narrowing, so we should expect a move. Again, I don't know which direction that move is going to go. Can't guess, but overall, is this really something that we should keep on our bear watch list? Probably not. So, I'm going to go ahead and take it off, because when it does start moving, it could go either direction. It's not one that I want to gamble on. So, goodbye, tech. Let's see, what else do we have for you right now? Again, we're not going to go ahead and do any new trades. So I'm not even going to bother doing any screening, because it seems to be that there's a lot of things that are just, if they're bullish, they're acting bearish. And if they're bearish or acting bullish, that can often signal like a lot of institutions and whatnot are rebalancing their portfolios. So we just want to see, again, with earnings and everything coming up, CPI and PPI coming up, we should expect stuff like this, where the market almost doesn't seem to make any sense of what's happening. So we are okay right now holding more cash and less positions. That's totally fine. Again, sometimes the best strategy is a patient strategy and just waiting for those good setups. Now, we can go ahead and look at the screener and find some things. Don't get me wrong, we can always find trades. But personally, I'm not confident in the market right now because of the CPI and PPI data coming up. It could literally kill, technically speaking, it could wipe out all of our trades that we still have open. So do I expect that to happen? No, I don't. But could it? Yeah, because the CPI and the PPI data could do essentially whatever the heck it wants to the market. We could have a humongously bullish or bearish market, and those numbers can just straight up completely reverse everything. And that's why you don't want to be in a ton of trades when we have important times like that. So again, we're just going to play it slow for now. And then once the CPI and PPI data do come out, then we can discuss a little bit more on what we want to do moving forward. Yes, we are technical traders, but there are some times where we do want to pay attention to the fundamentals. Okay, and that is the economic reports and the earnings and things like that. Because and like with Roblox today, they announced the lawsuit, and the market reacted quite negatively to that. So do we want to be in a stock that suddenly has some news, and even though the chart itself may be looking great, the news is causing it to do something different than what we should expect based on the technicalities of the chart. No, we don't want to be in those positions at all, ever. And if you're in those positions, you typically do want to close those positions, unless you get lucky, of course. And if you're bullish and the news is very bullish, then that's a phenomenal thing. But those are home runs that we don't ever expect to have happen. So we just kind of roll with those punches. But that being said, I don't really have anything else for you guys. Again, the market is going kind of sideways again. It's done the same thing the last few days. It's gapped up and done nothing. Gapped up, did nothing. Gapped up, did nothing. And it's all been on falling volume as well. So that's somewhat intriguing. Just due to the sense that, again, people are just, in my opinion, waiting for CPI and PPI to come out. And then I would be surprised if we see an explosion of volume on Thursday and or Friday. So I don't have anything else for you guys. If you have any questions, of course, don't hesitate to reach out. That's what we're here for. But until then, I'll talk to you guys in a few hours. Have a good